we will start today with how to read the financial statements, or how to read the financial information. This is the objective of this training. I will not give you our training of how accountants do their work, because accountants, actually the product of the accountants or finance professionals is a issuance of financial information, and to be used by other users. This is what we learned today. So all what you need to do is that the first step in finance is how to read the financial information. This is the most important thing. Then after that, the second day, we will start by analyzing this information, because this information, how to be useful, because it should gives you ability to take a decision. In order to take a decision, you need to be able to analyze this information. So next day, or the second session, we will learn how to analyze this information. So most important, you need to focus with me. This one, you need to answer. You need to ask a lot, as much question as you can. Don't worry, I will be able to assist you even after the session. If Dr. Ahmed would like to share my contact information and you would like to ask me, I don't have a problem. I like that so much. Contact me. My relation with you will not end with this session. So I know that you will be able to, you will not gather in everything, all information today, but at least it will be a starting point to understand finance and to deal with that. The third session will talk about the decision-making process, and it's very nice one, but make sure that the three sessions are connected with each other. So make sure to, before we finish, if you have any question, let me know. As Dr. Ahmed said, today we will use some tools in order in the online sessions. The problem is that I cannot see the participants, so we try to make this session interactive as much as we can. So before I start, so I need to know more. So you already know who I am, but I still need to know more about you. So I think I would like you to respond to these questions. I will share this in the chat, so everyone can have it. So let me share this one. So if you can click the link on the chat and respond to these questions, so I will get more info. This is not a question about finance. This is questions about you. So I would like, first questions, I would like you to let me know how frequently you deal with the financial matters at your work. So you deal with daily basis, weekly basis, monthly basis, or rarely. So this is very important for me to know. So could you please respond to the question from your phone, from your laptop, whatever, or at least go to menti.com and enter this code, or you just click on the link that you received on the. So I have one respondent now. Okay, weekly. Good. More please to join. I need you to be alert with me, because actually you will work with me. I'm not the only one who will participate in this session. So most of you actually have to work with me on that. This is an interactive session.
Yes, totally agree with Dr. Ahmed. So please, guys, just click on the link in the chat and then answer, and then click on submit after that. Okay?
Yes, please. Thank you, doctor. So select and click submit. Most
Submit,
important.
yeah.
Yes. Okay. I can see now from the participants that most of you actually use the financial information on a daily basis and weekly basis. This is a majority of the participants. Thank you for sharing this one from the same device that you can see the next question. I would like to let me know, what do you do? So your job title, or I know that most of you are pharmacists, but you work in a pharmacy or you work in a company. What is your title? What do you do? So you don't have to tell me your name, but at least tell me what did you. Doctor working as GB. What's GB? Okay, inventory controller company. Okay, good.
GP is the general practitioner.
Ah, okay, good. Sorry, I'm accountant, so I'm not familiar with that.
I am here to translate.
Thank you, thank you. Okay, so okay, that's very good. Pharmacist in pharmacist. Yes, okay, good. So you know, pharmacist is the most from different from non-finance professions is most people using financial information, and actually they are business oriented. As this, I like that in the working with a pharmacist. Actually, it's an easy class for me because participation is very good, and it's easy to deliver the financial information for them. Okay, that's good. So I think most of you actually dealing with financial information and dealing with mainly in a financial focused business. That's very good. Thank you so much. Let's see. The last question I would like you to tell me, this is not a mandatory question, but actually if you would, there is something that you would like to learn today, just let me know. So I would like to consider it while delivering the class. Let me know what is your expectation, what do you would like to learn. Is there anything that you need to learn in the finance? Any problems that face you, anything, even small thing, don't worry, just let me know. Just write and submit. Okay, understand how to manage, the first one, understand how to manage profit and loss. We will talk today about the, I know that this is this is a very good question. In order to manage the profit and loss, you need to know and understand the different items that for in the financial information, profit and loss, what are items included in revenues, what are items included in loss, expense, for example. So the component of the financial information, the financial statements, you need to know about it. So is it inventory, is an asset or expense? So you need to know what is the difference between asset, liability, equity, revenue, expense. So this is, it is important to be able to know these financial categories in order to be able to allocate the daily transaction correctly and be able to summarize right information. With this is what we learned today. Interesting. Dealing with patients. In what terms? In what capacity? How dealing with patients? I'm not sure I understand this question right, but anyway.
Yeah, probably from financial point of view, that dealing with patient, not to be in a dilemma that I can focus on it, while at the same time I have to focus on the patient health. Okay. I don't know if this, if Dr. Ahmed can answer your question here today, but I believe he can tell us from the financial point of view.
Doctor, that dealing with the patient is a source of wealth. Maybe we will learn today how to deal with the patient financially. Anyway, he is also a source of income for us. Not a problem. Thank you. Take a decision based on finance. This is a very good question, actually. But in order to be able to take a decision based on finance, you need to be able to learn the financial, to read for the financial information and make analysis. So the next session, we will be able to take a decision, analyze the financial information to help us taking decisions. Last question, analysis and report. Fast moving and slow moving and controlling loss to cash. This is a very, very good question. Next session in the financial analysis, we will use some ratio. We will do some ratio analysis And this ratio analysis, there is one ratio. It's related. It's called productivity ratios or activity ratios. It will show for us something called days in inventory, which will calculate how to calculate the number of days the inventory stay in the store. For example, a specific medicine, if you are working in a pharmacy or a store, so a specific, and you already, I think you need to care about the expiry date of the medicine you have in the pharmacy or in the store. So there will be a ratio that will calculate for you if you have a slow-moving inventory or some expired inventory items. Maybe the storekeeper have some expired stock of medicine, and he or she didn't tell you about that, maybe afraid or is negligent or whatever. So from analysis, you will be able to know, without going to the inventory and counting it, you will be able to know if there is a slow-moving items in your store. That's a very good question, and you need to focus next time. You will learn a lot from that, and I'm sure that you will have a lot of questions. Thank you so much for this. These questions. I think I can now start with the session. Okay. Today, we will have a lot of learning objectives to learn, but don't worry, it's so easy. Just let me know if you have any questions, just drop a question in the chat and I will answer it, or we will have in the middle a break for some questions you can ask. So first learning objectives that we need to learn today is describes the growing importance of global financial markets and its relation to the financial reporting. What is financial reporting? Financial reporting, so this expression, so it's called financial reporting. There are some kind of, there are financial information you can find in financial information, financial statements, financial reporting. Financial information is all financial information inside the financial statements. There are some kind of statements. We will see these statements now. And the financial reporting is a process of issuing these financial statements. This is called financial reporting. So financial reporting is the process of issuing the financial information in a tabular form, which is the financial statements. And this is what we will discuss in details today. What is in order to issue, to make financial reporting, this is actually the rule of the accountants. It is not your rule. So you need to know what is your rule in the middle of all of that. You are a user of the financial information. So you are a user of the financial information, which is inside the financial statements. So the issuance process of the financial statements and preparing the financial statements, it's called financial reporting, because we issue this financial information in a report format. So this is a process. This process is made by accountants. So what actually accountants do? Accountants do is identification and the measurement and communication of the financial information about economic entities, which is your business, to interested parties or users. Interested users, these users who may be you. So the accountant, what's happening? What the accountant do when he receives a transaction, when he sell a product or some kind of medicine, pay rent, record this information with a relative amount, and the issues of financial statements, and communicate these financial statements about your company to the interested users. So you are now a user of this financial information. And now today we will learn how to use this financial, how to read this financial information. In summary, this is the work of the accountant. Financial information, the accountant actually prepare in financial and prepare it in these formats. Here are the financial statements. So the accountant prepares the financial statements, and we have 4 financial statements. So you need to know this information. Not every information in finance is a financial statement. So you need to know the financial statements are 4 financial statements. We have 4 financial statements. And everyone have a specific objective. This is what we learned today. So the first financial statement is called the statement of financial position, and statement of income, statement of cash flows, a statement of changes in equity. And this is what we learn in detail today. So you need to know, if someone told you financial statements, so you know that we're talking about only these 4 statements. Okay? From these financial statements, we can generate additional information that can be used by different users. Okay, let's go to this next objective, and we need to identify the objective of the financial reporting. Why do we issue the financial information? Because the financial information and financial reporting is useful for you. For what? Why it is useful for you as a pharmacist? If you work, whether we work in a company, and or you would like to, you have some money and you would like to invest and do business. So actually, it is financial information is good for investors if you would like to invest in a specific company. So before investing in this company, in the stock exchange, for example, so first thing is that you read the financial information, read the auditor report in order to gather more information about this company, then to take a decision to invest in this company or not. Or this financial information also is good for the lenders. Suppose you, as a pharmacist, you run a pharmacy or a store, you would like to grow in your business, but you need finance. From where you get finance? You went to the investors and asked them, please lend me some money. And the investor, no, sorry, I don't know you and I don't trust to give you some money. Okay, so what is the next option? Going where? To the bank. You ask the bank, please lend me some money. So the first question for the bank will be happy to lend you money. But before lending you money, the bank would like to guarantee that they can get back this money, and you will be able to pay that. So the first question for the bank is, give me your financial statements. So the financial statement, the bank will read these financial statements, analyze it, and based on the financial information, they will take a decision to give you a loan or not. Other creditors may be the vendors. If the vendor, you would like to open an account with a vendor, with, for example, any vendors that gives you medicine. So before they give you the medicine in advance, on credit, so they need to understand that you are financially healthy. So the benefit or the objective of financial information is to help the decision makers in making what? A decision, any decision. Okay, so we have financial statements, or general purpose financial statements, which is the 4 financial statements that we have mentioned in the previous slide. And this financial statements is beneficial for usually investors and the creditors, to help them taking a decision about your company, whether to invest your company, lend you money, or any other decision related to you. We need to know also about when work as a pharmacist. For example, you are a pharmacist running a pharmacy and you own this pharmacy. So you need to make sure, this is a common mistake, is that, and I know that most of you doing this mistake, sorry to say that, you run a pharmacy, this pharmacy, it is your pharmacy, but you mix with your spending and the pharmacy spending. And at the end, you don't know if the pharmacy making profit or not. So you need to consider the entity perspective, that is that the pharmacy is a separate entity than its owner. So you are here, you are the owner here. Sorry, my drawing is not good. And this is the pharmacy. Okay, so this is 2 separate. This is 1 and 2. Your money, I know that you invested some money here in the company, but once you invested money in this company, this money is the capital of this pharmacy. But someone tell me, but I can use it. This money, yeah, this is my money in the pharmacy. Yes, but it is most important that the accountant, when he records the spending from the pharmacy that is for your personal use, not for business use, is to record it as what? Withdrawals, or withdrawals by the owner, not an expense for the pharmacy. So you need to make sure that it's the company, you see your business as distinct from its owner. Okay, so it is separate, financially separate. But in case you take money from the pharmacy, which is normal, make sure that the accountant, or you, if you do the accounting yourself, not to record this as expenses of the pharmacy. This is an owner withdrawal. I know, and I know, I'm sure that this happens a lot in any business, not a pharmacy. So one of the objectives also of the financial information, as we mentioned, is that decision usefulness. It helps the investors in taking the right decision, and also it helps the investors in assessing the company's ability to generate net cash inflows or not. Are you able to generate cash? This is what we will learn today. Making a profit doesn't make sure, or sometimes you find that at the end of the year you made a 1 million net profit, but you have cash 100,000 only. Why? I made 1 million profit. Why I have only 100,000 cash? So you will find an answer to this in the financial information. And also it will help the investors to assess management ability to protect and enhance capital providers' investment. It will help the management to protect the investments of the investors by taking the right decision. And usually the rule of this is the rule of the CFO or the finance department, is to maximize the wealth of the investors. So it is important for me as a CFO or decision maker to be able to read the financial information right, in order to be able to take a decision that maximizes the wealth of the owners. So let's answer this question. Let me read it for you, and I will answer quickly for this one, or you can write in the chat. The objective of financial information places most emphasis on what? Reporting to capital provider, reporting on stewardship, providing specific guidance related to specific needs, providing information to individuals who are expert in the field. Just let me know if you know the answer. I think this is what we learn today, is the financial reporting mainly place emphasis on reporting to capital providers, because capital providers here means that investors or banks, because they need to take a decision. The general purpose financial statements are prepared primarily for use. Why I prepare the financial statements? For internal users or external users? Usually the financial statements is issued for who? It's good for the bank or the investors, and these users actually are outside of the organization. So actually this is for the external users. The next objective, now we need to focus on this. Now we will learn how to read the financial statements. So the first one is that we need to know the basic elements of the financial statement. The first financial statement that we have is a balance sheet. The balance sheet. Balance sheet or statement of financial position. It has assets, liabilities, equity, or assets and liabilities, equity. This is a balance sheet. And the income statement have income and expenses. Income statement or profit and loss, B&L. It's called the income statement or B&L. So we have assets, liabilities, equity, income, expense. So you need to know that any transaction in your business need to be categorized in one of these 5 categories. So you need to know that we have in the financial information 5 categories, and you need to be able to differentiate between all of them. What are assets? What are liabilities, equity, income, and expense? So the assets, actually, we say about the assets is what the company own. What you own, anything that you own is an asset. So, for example, an equipment is an asset. The store or the building or where your pharmacy is an asset. The cash in your bank is an asset. So anything that you own is an asset. What about liability? Liability is anything that you owe, not you own, owe. So this assets is what you own, and liability is what you owe. So for example, the debts you have, the payables to the vendors, these are liabilities. And equity is the investment that you made as an owner. So when you pay, for example, you would start a pharmacy and you would like to add some money to this pharmacy. The pharmacy will not run itself. You need to make an investment in this pharmacy. So you will add capital. So the capital that you added in the company is categorized as what? Equity. Equity is what's left for the owners after if I have removed the asset and liabilities. So what is left for the owner is the capital. So, or the equity, or what is it's called owner's equity or stockholders equity. So these are the categories that's available in the balance sheet. Then we have an income and expense. An income is the money that you received actually from the sales process. So you sold some medicine to customers or companies. The money that you have received from the sale process is called what? Income, okay, or revenue. So income or revenue. But if someone pay his debts to you, this is not an income. This is he pays the debts to you, so this is not income. But when you sell something, this is an income. What about the expenses? Expenses is the business expense. If you spend some money about rent, for example, insurance, these are the salaries. These are expenses of the business. But I would like I will ask you a question, and you can differentiate about that. For example, there is a transaction. What is similar between asset and expense? Actually, if you would like to buy an equipment or computer, for example, a PC for your work, a computer, and you pay the rent. So what is the similarity between purchasing an asset or paying the rent? Is that you pay money. Here you pay money. But when I classify what I have paid as an asset or as an expense? If you own this one, if it has a future benefit, so what is the difference between asset and expense? Asset and expense, you pay money. So to get the computer, you paid money. To pay the rent, you paid money. But what is the difference? Why I classified this as an asset and this as an expense? Because actually, so I would like to ask you a question here. Answer in the chat, please. Inventory. Is an inventory. Is an asset or an expense? Okay, someone said asset. Good. Someone say expense. Why it is an asset? Yes, it is an asset. Yes, it is an asset. Why it is an asset? Because give us a profit. This is right answer, but let me clarify. Yes, exactly. Here is what I'm expecting in the future. It has a future because asset has a future benefit. It has a future benefit. But expense, the benefit have expired. So I paid rent for the last month. I paid the utility bill, the telephone bill for the last month. So it has no future benefit. So this is what is the difference between an asset and expense that has a future benefits. Exactly. Thank you so much. The second, the next objective is the basic assumptions of the accounting. You need to know the basic assumptions when we work on accounting. So the economic entity assumptions that you need to make separate between your company and your money. And this I have explained that. Going concern, when you build a business, you don't think that you need to build the business for 1 year or 2 years. No, build the business in order to continue for long. Monetary unit assumption, for example, that you work in United States, so you need to issue your information and record it in US dollars. But if you have a transaction, for example, if you are in Emirates, you have the currency, you report your financial information in dirham. But for example, if you purchased some inventory from the United States and you paid in dollars, you have to convert these dollars into the dirham. And so you need to record all your information in one currency. Periodicity, that you need to divide your information into accounting periods. The maximum of that is 1 year. And accrual basis of accounting means that, for example, if you purchased an inventory of medicine and you did not pay for that, and you will pay after 1 month, shall you record this transaction or not? Yes. You have to record the transactions when it is occurred, even if cash not paid or will be, even the cash paid now or will be paid in advance or next month. Before we go to that, let me share with you some questions that we need to respond.
On Menti also?
Yes, let me share the code. It will be the last code I will share today. There is a link in the chat. Please click use the chat, and I have some few questions. Okay, thank you. People have logged in, and let me go for the next question. So, okay, please answer this question. Which of the following, I will not know in which who made the answer. So I don't know. I will see only the results, and I will not be able to know who made the answer. Which of the following elements of the financial statements is not a component of comprehensive income? Two people answer. Make sure that to submit your answer. 3. Amazing. Amazing. In order to calculate the net income,
we need more answers, guys, please. Just choose your answer and click submit, please.
Okay. Okay, I'll tell you something, guys. Let me complete. We'll come back to this one because there's some information that I need to explain. So in the income statement, let me finish to you, so I know you will be able to answer more the questions more accurately. So we will discuss now the income statement, the first one. Income statement. What is income statement? I think you see the slides now, right? Yes.
Yes, clear.
Okay. So the first financial statements that we have is the income statement. Income statement, what is useful of the income statement is to evaluate the past performance and makes you to predict the future. This is benefits. So what do you do last year? What is your performance? You made profit or loss? This is the benefits of the income statement. Limitations. Companies omit items that cannot be measured reliably. So if there are some items that you cannot measure reliably, so sometimes the companies omit that. Sometimes it has judgment because of the depreciation. These are the limitations. But what I would like you to know today is the items of the income statement. The income statements have two items, main categories: income or revenues and expenses. So the income is the increase in the economic benefit. So any money that you generate because of the main business. So you are a pharmacist selling medicine to people or to companies. So the money that you receive from this process is income. But if someone paid the money that he owes to you, this is not income. But if you made provided a service or sale, this is it's called an income or revenue. So it is called, maybe it is a revenue or gain. So the revenue, any money that comes from the ordinary activity of the company. But gain, what is gain? Gain also is a revenue. But I say gains from items that is areas that is not the main source of ordinary business. For example, you have an old computer and you sold it. The old computer now has a book value of 500. And you sold it for 700. So that means that you have 200 income. No, it is not. We cannot say that this is a revenue. This is a gain. But revenue, if you made a sale of medicine, so this is called a revenue. So we have two categories of income, revenue and gains. What about the second category is the expenses, money that you pay in order to run your business. So these expenses, it has two categories. First, expense, which is money you pay for normal activities of the business, ordinary activities of the business, the same as rent or insurance or salaries. But when I say losses are any money that you lose or you spend in areas that is not ordinary business, the same example of the PC or a computer. You have the PC that you have its book value or cost $500, but you sold it for $400. That means that you lost $100. This $100 is not an expense, it is a loss. So these are the difference between the names in the financial information. So you have now the income statement, and this is the format, how it looks like, the income statement. First, you have your sales, and this is first income, source of income. Then you have cost of these sales, how much. So for example, if you have, you sold the medicine with $100 and you purchased it for $60. This is the cost. That means that you made a gross profit of this medicine of $40. Then you have some areas of expenses, which is called operating expenses. For example, selling expenses. For example, if you made a commission for the salesperson of $2, then you made paid a salary for an accountant, $5, for example. Then other areas. Then this is what is left is the income from operations. 49 minus 7 is called 30. It's 33. Then if you financing cost, if you have paid interest, then if you have paid the tax, and then until you reach to the net income. So you subtract the expenses from the revenue in order to reach the net income. So this is easy. Revenue minus expenses equal net income. This is an easy formula for the how to calculate the net profit. So net profit or net income, revenue minus expense. That's it. How to prepare the income statement is an easy one. So this is a detailed format of it. How to read it? You need to know the categories. That is sales, cost minus cost of goods sold equal gross profit. Minus selling expenses. What are selling expenses? Any expenses related to sales. If it appears only because of the sales, like what? Commissions of the salesperson, the salaries of the salesperson, but administrative expenses that is not related to the sales, like the salary of the accountant. you pay for the accountant as if you made sales or not. So it does not relate it to sales. Then after that, you reach to the net income. And this is an easy format for this one. But I just meant to, when you have these slides, you can go through all these details. How to report the income statement. We have a gross profit, which is gross profit is a revenue minus cost of goods sold. So as I told you, you have sold the medicine with $100 minus its cost $60. So you have $40. It's called gross profit, not net profit. So gross profit is what is left from the cost of what you sell, from the sales price of what you sold. After that, you deduct some other expenses, the operating expenses, which is when I deduct the operating expenses, you reach to the income from operations. You can classify the expenses by nature. How is it cost of material, direct labor, employee benefits, or by function? For example, is it cost of goods sold or selling expenses or administrative? This is how we can classify. I told you before the difference between gains and losses. Gains or losses, which is appear, it is similar to revenue and expense, but not for areas from not related to the main ordinary business. At the end, you reach to the net income, which is revenue minus expenses. Now we need to go back to the questions in the Mentimeter in your phone. So I will share the link again in the chat, and please respond. So the first question, we answer to the first question, but let me go back and find what is the correct answer. The correct answer is that distribution to owners is not a part of the income of the comprehensive income or income statement, but we have the revenue and losses and expenses are part of the income statement. So the next question is that the most income statement reveals what? The income statement reveals what? Don't follow the flow.
It is not an easy question.
So resources and equities this is what you own, but the income statement shows the net earning, net profit. It's called income statement. So it shows for you your profits, your earnings. It shows the net income, but it shows the net income for what? The cumulative. So for example, if you have the business for 5 years, so it shows for you the income for 5 years or only year by year. It shows it by year. So the correct answer is that it shows the net income for a period of time, which is 1 year. So make sure to know that. Income statement, it shows the net profit for 1 year only, or for a specific period of time, maximum of 1 year. So if you're operating the business for 5 years, it will not show that. It shows only the profit for a specific period of time. Okay, this is good. It's good to solve wrong because you learn from your errors. So which of the following is not a selling expense? I just mentioned that, sorry, maybe I speak quickly, but it's an easy one. Selling expenses is any expense related to the sale process. So people who answer the freight out is what? The delivery cost, the delivery. So when you sell, so when you pay the delivery cost, when you sell. So this is an expense related to the sales. But the salary of the accountant is not related to sales. So the correct answer is office salaries expenses. Okay, both revenue and gains increase the net income and owner's equity. So what is owner's equity? Is the capital of the owner. So and the capital of the owner increase when I generate income. Yes. So is the net income, once net income, when I generate income, your capital as owner increase. If you have a loss, so your capital, what happened? Your capital in the company, what will happen to your company that you invested? It will decrease. So yes. So increase in capital, net income will increase in owner's equity. Revenue will increase net income and will increase as well the equity. That's correct, true. Okay, so before we go to the test, let us finish the last part and learn more about the balance sheet and the cash flow statement. So let's go to the financial statement of financial position. What is the statement of financial position? Maybe it has another name as let me check the, sorry, the PowerPoint stopped. Sorry, I think I need to restart it.
We can see the slide, the statement of financial.
Yes, but it's stopped. It's freeze. It's freeze.
Okay.
So let me.
Now you stopped sharing.
Yes, I will restart it. Sorry.
It's okay. But it's very interesting, especially for the people who are non-finance like us.
Thank you. I hope that it comes with a good benefit for you. Okay.
It happens with the technology, always.
Yes.
Yeah. So until Dr. Ahmed will restart his PowerPoint, if you have any question, guys, you can share it through Q&A. You can share it by the chat, or you can raise your hand, and then we'll give you the chance to talk after Dr. Ahmed will finish his presentation. Now we can see it.
Okay, that's good. Okay, let's start with a statement of financial position. We can say this is a balance sheet. Balance sheet is it shows your financial position, and we need to know more about the why I need or the benefit of the financial position. Is a financial position or balance sheet? It is useful to help you in calculating the rate of return, the return on your investment, your capital structure. You depend more on debt or you depend more on equity. You need to assess that if you are in a high risk or not. Can you generate future cash flows or not? It will help you in calculating your liquidity position, solvency, or the financial flexibility. So the problem from or limitations from the statement of financial position or balance sheet is that the information of the assets and the liabilities are historical information. So that means that if you have a building is this building or the store of where you have the medicine stored, you purchase with a cost of $1 million. And after 5 years, it's for sure its value will not be $1 million. It could be $3 million. So how I will represent this information in the balance sheet, you have to show it with its cost. So you do not show the assets with its fair value, you show it with historical cost, and this is a limitation of the financial position. So what are the classification? You have 3 categories in the statement of financial position: assets, liabilities, and equities. And we mentioned that the assets is what the company own, liabilities is what the company owe, and this is the capital invested by the owner. So this is what the company own, liabilities is what the company, what you owe to the vendors, for example, or to the bank, and equity is the capital. Subclassification, once you have the slide, you can review that in deep. The assets can be classified in subcategories. For example, you could have non-current assets or current assets. In liabilities, you have equity here, and the liability, you could have non-current liability and current liability, and we will learn now what are these differences. Let's start first with the assets. The assets, we could have non-current assets. Non-current assets mean what? That assets that like long-term investments, property, plant, and equipment. For example, you have a building, you have an equipment, or intangible assets if you have a patent, for example, or you have a license to distribute a specific medicine, or any other assets. These are, it's called non-current assets. Long-term investments may be secure investment in securities, special funds, any kind of investment that is long-term, more than 1 year. What are the property, plant, and equipment? This is a physical property, the same as land, building, machinery. These are property, plant, and equipment, and this is how we can categorize. Intangible assets, the same as patent, copyright, franchise, your goodwill, or the trademark of your business. These are intangible assets. It's called intangible because you cannot, it is not, they are not physical. And this is how it looks like in the balance sheet. But then current assets, what are current assets? And this is most important, you know, what are the current assets? And what is the difference between current and non-current? Current assets means that any asset that you can convert to cash or sell within 1 year. So for example, you have inventory. Inventory is expected to sell within 1 year. Yes. So this is a current assets. You have cash, or you have a receivable. Someone owe you money, and he will pay for you after within 2 months. So this is a current assets. So any money asset, any asset that can be converted to cash within 1 year, it is a current assets. Anything else, it is non-current assets. So the same as inventory, you can generate within 1 year. Receivable, this is the money owed to you. So for example, if you sold the medicine on account and you will receive this money after 2 months, it's called the receivable. Or prepaid expenses. Prepaid expenses is like you paid insurance in advance. So this money, you still own this money. It is called an asset because it still have an expense, but it has a future benefit because you pay an insurance in advance. If you paid the rent in advance, so it is an expense, but it is not classified in the income statement because it still have a future benefit. So that's why prepaid expenses, make sure that prepaid expenses is not classified in the income statement and it's classified in the balance sheet. And this is how they looks like in the balance sheet. So also the short-term invest. So you can see the investments. We have long-term investment and short-term investments. So for example, if you buy some stock or shares or bonds from the stock exchange and you plan to sell them within 1 year, so they are short-term investments. Cash, for example, is already a cash. So this is a current asset. So we have now assets and liability, finish the assets. The equity section is having your capital, how much money you invested in the company. This is the equity section. And this is how it looks like in the balance sheet. The last section in the balance sheet is the liabilities. Liabilities is classified as current and non-current. To classify easily, the current liabilities, any debts or any money that you're going to pay within 1 year. But if the debts that's more than 1 year, they are non-current assets. The same as you owe money to the bank, a loan. This loan will be paid within 2 years, for example. That is non-current assets. But if we're gonna be paid within 12 months, so this is a current asset. So the classification only between, liability. Current liability and non-current liability classification only between is due to when are you going to pay, within 1 year or after 1 year. Within 1 year, it will be current. This is current liabilities is any money that you pay. For example, you pay it to the vendors within 1 year. So this is a current liability. And these are the examples of current liabilities, how you can classify them. So how it looks like the balance sheet. So here is the balance sheet, assets, non-current assets and current assets. These are the subcategories, and equity and liabilities. Here are the equity and the liabilities section, current and non-current. This is how we report that. But make sure why it is called balance sheet, because the total assets have to equal total liabilities and equity. So this is why I say that this is a balance sheet, but at least it shows your financial position. This is what you own and this is what you owe, have to equal to each other. The last section and an easy one, the statement of cash flows. And this is very important. And this is an analytical tool. Why? Because, for example, you have generated net income or net profit of 1 million. And the cash balance in the bank is $100,000 only. Why? Where is the rest? Where is $1 million cash? So you have the answer for this in the cash flow statement. In the cash flow statement, it shows for you where the movement of your money. So it has the primary purpose is that to show you the relevant information related to cash receipts and cash payments. Where is your money come from and where it is paid for. For example, but you need to categorize it as 3 categories: operating activities, investing activities, financing activities. What are operating activities? This is the most important one, and it should have a positive cash flow, because if it has positive cash flows, that means that you are working very good. You're generating positive cash flow from your operations. So you already, your business is growing. Investing activities, it only shows if you invested money in assets, you purchased equipment or something. And normally this is a negative cash flow. And here is why you will find that where did you spend your money? So usually this investing activities generate negative cash flow. But financing activities, this is the sources of finance from where you can get money from the owners or from the bank. So this could be a positive cash flow or negative. If it is positive, that means that you borrowed money. If this is negative, that means that you paid your debts to the bank. So this is how it looks like. And this is how it looks like. You have the operating activities and the investing activities. This is a total. As you can see, it is positive. Investing activities, usually it is negative, and financing activities, maybe it is positive or negative. And at the end, it shows for you how much you generated during the year. You calculate that, you add this to the balance that you have at the beginning of the year, then it will show you how much cash at the end. So as you can see here, I have generated net income of 320, but what is left from this income as cash? 279. So it shows for you from where your cash goes and ends. Why it is useful? Because it gives you a snapshot if the company can survive or not. And this is the end of the slides. Let me share with you quickly the questions. It will not take time. It is sorry, I'm late, but I'm sure that you will enjoy.
It's very interesting.
Yes, this is a test. So make sure that you answer quickly. You have only 20 seconds to answer, and the one who will answer quickly, correct, will get extra points. So let's see who will win today. So you need to enter your name in the next slide. You can enter your name or nickname if you're not sure that you will do well. Okay, so ready? Did you write your name? So let's start. Okay, we have 7 participants, so please join, guys, if you can join. And this is very interesting test, please. It's just 6 questions. It will not take too much time, and we'll see.
So guys, please participate. It seems very interesting. Please.
Okay, just write. Use the link that I have shared in the chat, and just write a name or nickname. Okay, let's start. You will have a question now in your phone. Just make sure to click submit.
No, it's just you just answer.
Oh, okay, that's good. So all of you answer correct. That's good. Amazing, amazing, very good. Let's see who answered faster. The faster will get more points. Okay. Nickname MS gets the highest points, or the burger. Okay. Okay, so let's see the next question. Okay. Land held for speculation. So is it property, plant, equipment? If you will use it as in the operation, it will be yes. But for speculation, you need to make a profit from this. So this is an investment. So it is false. Aha, 3 only know the answer. So land held for speculation is for an investment. It is not used for the operations. So property, plant, and equipment, you add assets that you use in the operations. But if you use this asset as an investment, so it should be categorized as a long-term investment. So 3 answer correct. Thank you so much. And I meant to make the, sorry, let's see who solved this correct. WK, Mr. Ahmed Higazi, and Nasreen Amini. Okay, Nasreen Amini. Okay, that's good. So Mr. Ahmed Higazi at the top of the list. Thank you. So the third question, we'll see if Mr. Ahmed Higazi, Dr. Ahmed Higazi will be on the top of the list or not. Balance sheet is useful for analyzing all of the following, except what? The balance sheet, yes. So when we do analysis, so oh, okay. So I like when you do answer incorrect, because we learn from our mistakes. Okay, so the balance sheet is good to know about liquidity because it has your assets. It gives you analyzing your solvency because it will measure if you will be able to pay your long-term debts or not. Financial flexibility, it will also help you, but profitability is not in the balance sheet, it is in the income statement, right? So the balance sheet is not useful for helping you in analyze profitability, because you use the income statement to help in profitability. Thank you for the one who answered correctly or incorrectly, but we'll see. Okay, Mr. MS will go at the top again of the list. Okay, Dr. Ahmed Hijazi in second. We'll see who will survive. 3 questions left. Current asset. Do you remember current assets that can be converted to cash quickly? Which one can be converted to cash quickly? Amazing. Inventory, yes, can be converted to cash quickly. We'll see who answers this correct. Oh, some people from the bottom is going up now. That's Dr. Ahmed Hijazi. Oh, sorry. Okay.
Giving chance to others, yeah.
No problem. Okay, MS was still in the top. Okay, and it's fast. That's very good. 2 questions. We'll see if MS will continue at the top of the list or not. We just have this information before we finish. Which financial statements that has operating, investing, and financing activities? More participants. That's very good. Thank you. Statement of cash flow. Statement of cash flow. Statement of cash flows. It shows for you investing and financing and operating activities. We had this information. Thank you so much. Okay. Oh, some people from the bottom is going up. That's good. But still MS in control. That's good. We'll see. Last question is a final. We'll see.
Yeah, MS, ensure that you do right.
Who's MS? I don't know. Okay, the statement of cash flows provide answer to all of the following except what? This is a tricky one.
Difficult approach.
Inflation. So it's the cash flow statement. From its name, it shows for you where the cash come from, where is the cash used, and what is the change of the balance. It shows for you the change in the cash balance. Okay, but it doesn't show for you the impact of the inflation on the cash. So, okay, so 3 answers these questions. We'll see MS part of this one or not. Oh, not. So Dr. Ahmed Hijazi is going up. And WK, and we'll see. Oh, WK. WK. What's the name? What's the real name? WK.
Okay, I think Wissam. I don't know. The only W here in the list is Wissam.
Anyway, congratulations and thank you for everyone. I just need to let me, if you can answer, let me in your phone or the tell me if you have any questions or feedback. I'm happy to answer. This is the last part.
Thank you so much, Dr. Ahmed. Really, it was great, interactive and nice presentation. Really, it was great. I liked it so much. I see some comments from the audience, from Dr. Nasreen. It was great. And I believe all the attendees are really interested. So they are saying, thank you for your information. Thanks from different attendees. Very nice. Thank you. So you can see different comments in the chat. I think, guys, this is something very exciting, very interesting. I'm sure that all of you will attend next time and the time after. Yeah, so thank you so much, Dr. Ahmed.
You're welcome.
The
I enjoyed
time
a lot.
really flied. We didn't feel it because it was very good and we really appreciate. And we ask you, if you don't mind, that we can share the presentation with the attendees.
Sure, yeah, exactly, yes.
Okay. So we'll prepare it and share it. And thank you so much all for your time. Just one quick note that starting from the coming few days, you will start to receive the certificates from the previous meetings, because we are preparing some stuff, but already done and prepared, and you will start to receive the certificates in the coming few days. So until next week, if you didn't receive anything, just let us know, and we'll arrange it for you. Thank you so much. Thank you to all attendees. Thank you, Dr. Ahmed. Thank you, Dr. Mustafa and support from Cinfa. Thank you, Dr. Samir, for attending also with us this session. We really appreciate your presence. Mustafa, if you'd like to say something before we close.
Yes, please, Dr. Ahmed. I think I have to appreciate and thank Dr. Ahmed Musa for very excitement and interesting session. The information is excellent, but also the way you present, really appreciated. It's very interesting, very interactive. Maybe for me a lot of information, I know it, but really I enjoy the excitement and the interaction.
Thank you so much.
Congratulations really for this level of presentation. And I encourage everyone not to miss the next week. I think it's a very interesting topic and presentation. One more last thing. Now we need financial solutions. Yes, we know about the problem. Okay, great. This is a part of the issue. Now we all waiting for financial solutions. So we need some problems, and what are the best solutions for it?
I think next two sessions will generate a lot of questions, because we will go deeper in analysis, and I'm sure that we will have a lot of participations. I apologize, I go more than 1 hour, but the information is, I know, is important, but apologize for that. I enjoyed a lot, but I'm sure after the 3 sessions, you will be an expert, inshallah, in the finance. And anyway, as I said, my relation with you is not ending with the session. I appreciate if you could share with me any questions. I will be happy to answer your questions.
Thank you very much. Thank you all. Thank you.
Thank you. Goodbye.
Thank you. Assalam.